Many real estate experts predicted we were heading toward a market crash in 2020 and again in 2021, but clearly that didn't happen. We've seen double-digit increases in home prices the past year, and it appears to be continuing to climb. Just this week, the San Jose Mercury News published an article titled "No Holiday Discounts in Bay Area Real Estate Market as Insane Market Continues," which says the boom continued across the region, led by rising median single-family home prices in San Mateo County, up 23% from the previous year to $1.84 million. Alameda County up 23% to $1.2 million, and Santa Clara County is up 21% to $1.57 million. That's according to CoreLogic data. It's really crazy what's happening in the housing market. I remember at the beginning, back in March 2020, there was a lot of fear that the housing market was going to crash and people were worried about jobs. Not only did that not happen, it's like we were launched into the fastest increase of housing prices ever. The article goes on to say high demand and a low inventory of home sales drove the nation's most expensive home market. Rising prices have left many would-be buyers frustrated, while sellers reaped the higher returns on their properties and could pick and choose from multiple offers. Historically low interest rates hovering around 3% also boosted the market. Now, I've definitely seen this happening. Unless buyers have an unlimited budget for their home purchase, at least for now, gone are the days of making a must-have list for your home that you're looking for. Many are just happy to get their offer accepted on a house, any house, period. Just a place to live. That's what they're looking for now. This is especially true for homes priced on the lower end of the market because of the high demand from first-time homebuyers and investors. With a continuation of low inventory, home prices are expected to rise again in 2022. Now here's a quote. Low-tier priced homes are still in higher demand as entry-level buyers and investors continue to compete for the very limited supply. CoreLogic economist Selma Hepp said in a statement, she expects 2022 to bring another strong year of price growth at around 7%. Now, keep in mind, many of these experts were predicting an increase of between 5 and 7% in the market back in 2021. And boy, were they wrong. From October 2020 to October 2021, U.S. home prices rose a whopping 19%. And the Bay Area housing saw a 23% increase. So, what if the experts are wrong again? Could we see a double-digit increase by the end of 2022 again? Now, one of the things that I kept saying when people started working from home and kids were schooling from home was that people were going to need a lot more space. Bigger spaces and lots in Contra Costa and Alameda counties are drawing Silicon Valley workers less concerned about their commutes now that they work from home, and the price is right. I know this was very true for my family. Once my kids started schooling from home, my small home office quickly became a classroom and an office. I wasn't going to my office in downtown Pleasanton anymore to minimize my exposure, and I ended up resorting to wearing noise-canceling headphones so I didn't have to hear my kids in their classes when they were sitting just 2 feet behind me. I expected demand for homes in Alameda and Contra Costa counties to increase because larger homes and more affordable homes in those counties compared to Santa Clara and San Mateo counties. It just seemed like a logical move to make to get more space. But I certainly didn't see a 23% increase in price coming. Now, if you put off buying a house in 2020 or in 2021, waiting for the prices to come back down and are still waiting, now consider this. If you had a budget of $1.2 million in 2021, the home you could have bought then would now be selling for $1,476,000 in Alameda County. That's $276,000 more. Now, I love numbers probably more than most people. Just stick with me here. If you're putting down 20%, that price increase means that you need $55,200 more for your down payment now than you did just a year ago. And that mortgage will cost you $1,044 a month more than it would have a year ago. That's $375,840 more over the life of the loan of a 30-year mortgage. That means that the cost of waiting to buy has a potential cost of $431,000. And that doesn't include the cost you paid in rent or the deduction you could have saved on your income tax. And I didn't even factor in how much more in property tax was going to cost you because it's based on the price you pay for your home. Now, I know many of you will still say that you're going to wait for the market to come down before you consider buying a home. But consider this. One factor that may slow or even reverse the increase in home prices is interest rates on the mortgage. An article published December 1st, 2021 on themortgagereports.com says, as the U.S. economy continues to climb out of its COVID slump and inflation puts upward pressure on interest rates, most experts agree mortgage rates will continue to climb higher in 2022. Just how high will they go? Industry resources are split on that, but they mostly agree on 30-year rates in the high 3 to low 4% range by the end of this year. That means it's in your best interest to buy or refinance early in 2022 if you're banking on today's low rates to help you save. Let's calculate what that means in terms of monthly payment. If you were to buy a home for $1.2 million and put 20% down, you'd have a loan amount of $960,000. Now let's say that interest rate today is 2.8%. I just looked those up online and that's what it is as of this recording. That's a mortgage payment of $3,945 per month. If you wait and interest rates go up to, let's say, 3.8%, you're looking at a monthly mortgage payment of $4,473 a month. That's $528 a month more. But that's not the whole picture. What if the predictions are correct and that price of that home goes up by 7% by the time you buy? And that's just later this year. You will either be buying less home or have to pay more for it. Let's say you pay more for it, 7% more. That's $84,000 more. So $1,284,000 minus 20% down payment, that leaves you a loan amount of $1,027,200 at 3.8% interest rate. And you have now a payment of $4,786 a month or $841 more per month by waiting. And again, I'm not even factoring in the extra down payment you need to have, the higher property taxes, the deductions you lost on your taxes by not buying sooner, or the rent you paid during the time that you were waiting. Now, if you already own a home and would be selling it to buy something different, the increase in price from waiting won't affect you as much, assuming that the home you currently own would also be increasing in value as well. But where will you go? This is part of the reason home prices are increasing. There's very low inventory, especially in the Bay Area. I know some Bay Area sellers are considering cashing out and relocating out of state to lower cost of living areas. I know a lot of people who have done it already, and I'm sure there are many more considering it as well. It's just too tempting. If you're a Bay Area homeowner considering relocating, check out some of my relocation videos. I'm comparing some of the most popular states Californians are relocating to and looking into side-by-side cost comparisons so you can get an idea of just how much moving may actually save you. I've done videos on moving to Texas, moving to Washington State, moving to Idaho so far, and I have many more state comparison videos in the works. But homeowners, I recommend that you talk to your CPA. Ask what the tax implications are if you sell, particularly if you're single and your home has increased more than $250,000 since you bought it, or it's increased more than $500,000 if you're married. If you're retired and collecting Social Security and on Medicare, also ask if selling will impact your Medicare benefits. It's important to find out and plan ahead in advance of selling so you don't get any surprises later on down the road. If you have a real estate question, I have answers. Give me a call, send me a text, shoot me an email. Let me know how I can help you, and I'll see you in the next video.